Hello, this is Mark from tradinginform.com and welcome to this video on how to trade Bitcoin like a pro. In this video I'm going to be talking about the differences between professional traders and amateurs. I'm going to be talking about the specifics of Bitcoin and cryptocurrency markets, and finally I'm going to demonstrate a trading strategy that anyone can use to trade Bitcoin. So what do professionals do that amateurs don't? Well, number one, professionals have a plan. They know under what conditions they will be entering a market, when they will be exiting, and how they will manage the trade. Professionals know the mathematical expectancy of their trading strategy. They know with empirical data how their strategy has performed in the past. And finally, professional traders are in control of their emotions. So what is it that professionals don't do? They don't buy and hope. And for that matter, they don't sell and hope either. They don't over leverage themselves. They don't give themselves a chance of going bust. And they don't buy and sell based on whatever today's financial headlines are saying. So how can we make sure we are trading like a professional? Well, at tradinginform.com there are lots of resources to help traders trade like a professional. In fact, Trading Informed exists to help traders develop the skills and to stay ahead of the competition. And one way it does that is providing the opportunity for traders to backtest their own trading strategies. There is a link on the screen at the moment, and later in this video I will be demonstrating a Trading Informed backtest model that you can use to test your own trading strategy. So the specifics of the Bitcoin market. Well, Bitcoin and cryptocurrencies in general do not provide a return. So it's not like investing in the stock market when we can reasonably expect dividends and share buybacks to increase our return over time. We have to be able to sell. If we're buying, we have to be able to sell at a higher price than what we bought, and if we're selling, we need to be able to buy it back at a lower price. So it's not a normal investment. There's lots of other, we're all aware there's lots of other cryptocurrencies out there. At the time of recording, Ether, Ripple, Bitcoin Cash and gold are all popular ways of investing or speculating on cryptocurrencies. We don't know what new ones are going to come along, so this is a very rapidly evolving marketplace. The other thing that we've all seen is that governments are playing catch up here, and some governments are taking a tougher line than others. This really is the Wild West. There is no centralized figure or body or group who is in control of Bitcoin. So we have to expect the unexpected. This Bitcoin could double, treble, quadruple, or it could go to zero, or it could be anywhere in between. At this moment, it is a pretty wild ride for investors and traders. And with this leads on to my idea of how to trade Bitcoin. Now, one of the things we've had throughout the history of Bitcoin is the price has tended to go up. And if we could go back in time and invest at the start, we would all do that and we would all be geniuses. But we can't. We have to work with what we have and the price we have today. So Bitcoin has tended to go up and down. It's also tended to move in quite a volatile way, and it's tended to trend. So my idea for a trading strategy on how we can trade this market like a professional is to trade breakouts. Now, if we're trading breakouts, we're basically looking for a market to trend, and Bitcoin has done that spectacularly well so far. And the way I'm going to recommend doing that is to use a trading strategy and an indicator called the Arun indicator. Now, the Arun is an indicator that I've spoken about before. I've explained the calculations about it before, and it's an indicator I like. To give you a very brief rundown, it's not a complicated concept. Basically, the green line is looking at breakouts to the upside, and the red line is looking at breakouts to the downside. So I'm going to be running my long trades based on the green line and my short trades based on the red line. And the very simple entry condition is that when the green line goes over the 30 line, I'm going to enter long. And when the red line also goes over the 30 line, I'm going to enter short. Okay, so if you want the full details of the trading strategy, there is a link on the screen and below to get a bit more information about this. The way I'm testing the trading strategy is using a trade-informed backtest model. Now, I've got it on the screen at the moment, and this is a way that anybody can test their own trading strategies. It's built in Excel. You can test all sorts of different markets, different time frames. You can use different technical indicators to open and close positions, and you can trade long and short. So there's all sorts of different options for using a trade-informed model. And you can click on the link for more information about this and to see the latest models that are available. Now, if I click here on the results tab, we can see how this strategy has performed. And I want to quickly go over here, and this is the underlying market. Now, I'm only measuring this since over halfway through 2014, so this is only 3.5 years worth of data. We can see the huge parabolic move that we're all familiar with over 2017, and since then the period of consolidation and possible breakout to the downside we've seen. The underlying market has shown over this time period a pretty staggering compound annual growth rate of 146%, but that is accompanied by a max drawdown of 70%. If you remember what I said about professionals, is they know the mathematical expectancy. So we would all love to achieve that annual growth rate. How many of us could have dealt with the 70% drawdown is a different matter. Professionals are in control of their emotions, and they know what to expect and how they will respond in different conditions. So we can see here that in 3.5 years, we've only had 17 trades, and this is a trend following strategy. So the strategy loves nothing more than waiting for a breakout, getting on board that breakout, and not closing until the breakout has definitively finished. These are the buy and sell levels that I spoke about before, and these can be easily adjusted. And we can see how that makes a difference to the trading strategy. We can add in a cost of trading. We can bring this up to something like more real world conditions. We can add in a fixed spread of, say, approximately 1%, or we can add in a fixed cost. We can use a profit target, and the one that I have already programmed into this model uses the ATR. I could say run a 5-period ATR profit target, or a 10, or 30. And we can see how that affects the strategy. We might want to put in a stop loss, so we could try a 5-period ATR for a 15 period. Maybe you like to use a trailing stop. We can try one of those as well. Now, I'm going to go over here to the results of the strategy. Historically, this strategy has performed pretty well on most bases, returned 29% compound annual growth rate. Now, this pales when compared to the underlying market. However, it has been achieved with a much lower percentage drawdown. This is what I'm saying about professionals understand the risks that they are taking. So we can't guarantee that this drawdown will be the same in the future, but this has been the conditions in the past. So we've achieved a very nice return, a nice annual return for a reasonably modest maximum drawdown. Now, you may be more conservative or more of a risk taker, in which case you can adjust this. So if we want to reduce our leverage, we might say 0.5, and we can see how this affects our return, but also once again our drawdown. If you're more of a risk taker, you could double your leverage and get an annual return, historic annual return of 60%. Push this up quite as high as you like. Okay, so this is the trading strategy that I would recommend, and this is the way that I would recommend anybody that wants to be a professional trader to think about their strategy. Now, if you enjoyed this video, please hit the like button and do remember to subscribe to this channel for more videos like this and for more information about trading the financial markets, and in particular about backtesting your trading strategies. Please go to www.tradinginformed.com.